Block Energy is the development and production company focused on Georgia. It's told investors about record production in Q2. And this summer, it spud its next Project One development well, WR34Z. For more, we're joined by Chief Executive Paul Haywood. And of course, things have gathered momentum, Paul. So, what did WR34Z present, and when can we expect results?
Thanks, Sarah. Thanks for having me, as always. Um, the the WR34Z well has been obviously is the third well in a 5 well program that was previously captured by the CPR that was performed across Project One, Phase One. The authors of which was ERCE. That report got released last year. It's an exciting well. It comes off the back of 2 successes, of course. So we're hoping for another success here. The well is being delivered on plan, on budget, with no incidents, which is clearly an important aspect of delivering on the plan. And we are excited to now move into a testing phase, of which results will be announced to the market in due course.
You mentioned that keyword success there. So how confident are you that WR34Z will contribute further to the material improvement in the company's cash flow? That's been the company's words in the past, not mine.
That's a very good question and very well articulated, Sarah. Well, the company goes through the senior execs go through a rigorous process when allocating capital to future work programs. And Project One is what we believe to be our lowest risk project, in that the risk the company is taking on is purely associated with development of a proven field, of which, of course, comes off the back of 2 major successes. So we see this well to carry relatively low risk, certainly execution risk, because we're drilling a reservoir and executing a program that we've proven to be able to design and execute on plan, on budget previously. And of course, now we move into the commercial risk component, and that's ensuring that we're able to produce commercial volumes of hydrocarbons that enable us to deliver on our investment criteria. So we're confident where we stand today, particularly having drilled and completed this well on time, on budget, and now it's we eagerly await results of testing.
Okay, so 3 times already you've said on budget. So is the company, break even, or will Block need more money?
Well, where current production sits well above our break-even mark, so we're able to basically build our cash flows and recycle those back into operations. So, to respond to your question, does the company need more money? Absolutely not.
Because you have drawn down a £2 million loan. So I'm just wondering if Block is making enough money to avoid seeking new loans.
That's right. No, we're fully covered on our cost base and able to ensure that we're fully covered with a sensible margin on all short-term liabilities, including a shareholder loan, which of course was brought in to ensure that we kept the drill bit moving, which is one of the most important aspects of this company, and in my view, one of the most exciting.
So the work that's been done on this well, and maybe others, is being done by your in-house operating company. Is this a departure from outsourcing? How's this initiative going?
I think we've been operating our own assets since 2018. We're a party to 8 production sharing contracts, have a range of high and low producing wells within the portfolio. In essence, moving to, if you like, a more hands-on approach with how we design and implement the execution of drilling these wells in-house as opposed to outsourcing, provides 2 major benefits, really. A, of course, tighter cost controls, which is key to ensuring that we hit our investment criteria internally. And B, gives us better control over our own destiny whilst building our own intellectual property, of course. I think to date we've proven to be the most efficient operator in country, and we plan to maintain that course. Right now, as we've already touched on several times, we're coming off the back of 2 successful wells, hoping this is going to be our third, of course. And in essence, the confidence is really starting to build within the team now, and capability is following that trend.
So there's plenty going on concurrently. You know, there was the aggressive drilling campaign. I'm just wondering, and there's the appraisal of project 2 and 3. Are you still confident that 2 and 3 will be high impact gas and oil targets?
Yes, indeed, Sarah. Of course, the company's obliged to announce on material activity as and when, of course. And material activity, as we sit today, is pretty much defined, around the drill bit moving to the right. So, in essence, what our followers in the market will see at this moment in time is a lot of activity around Project One. But make no mistake, there's still lots of work internally ongoing on Project Two, which aims to appraise and develop what we believe to be the contingent resource potential across the proven Sangori Patazuli field. Whilst in parallel to that, and this is what we are most excited about internally, of course, when we certainly look at high impact events for the company, and that's getting after appraising the over 1 TCF opportunity that sits across our 2 key licenses, Block 11B and 11F. Needless to say, and it's one that often drops off the list when I'm talking to shareholders and our followers, but we've also got Project 4, which is a combination of appraisal and exploration opportunities that equate to over 1 billion barrels of opportunity. So there's additional work that's moving in parallel across that project, as well as our Project 3 and 2. And needless to say, Project 3 has been defined as strategic asset by the government of Georgia because of its scale and the impact that it would have on the domestic gas demand in country. And Project 4, well, the government's already a 22% shareholder in Project 4. So, there are a lot of eyes on those 2 projects whilst we quietly and efficiently move forward our Project 2 efforts.
All right, so 4 projects, high impact events, on budget, on time. So when you talk to investors about the opportunity that they have with you, what do you tell them in addition to all that? Exposure to Georgia's growing economy, strong regional demand for oil and gas, strong international demand for those resources.
All of the above, actually, Sarah. We've clearly got strong domestic needs for the hydrocarbons that we produce in Georgia, but we've also got direct access to Europe through the BTC and SCP pipelines that run through the heart of some of our key license areas. So direct access to Europe, strong local demand, and a very willing and supportive government to see us develop what they've defined strategic assets. So, we feel particularly with the success of Project One that's being experienced currently, we feel that Block Energy offers a compelling investment proposition, particularly when ranked against this peer group. Albeit we're certainly seeing an additional risk premium feed into the stock at the moment for obvious reasons. There's a lot of question marks as to where and how, if the regional issues will calm and simmer down, if you like, and what impact and overspill that's having to the country of Georgia. But by and large, when we look at what we're doing and how we're performing against our peer group, clearly we see there to be lots of value potential in the equity today.
So finally, let's talk about the company's relationship with the government, because in April, which seems so long ago, you signed a memorandum of understanding between yourselves and the Ministry of Economy and Sustainable Development of Georgia, which is quite a mouthful. It was to envisage the concept of a long-term gas offtake agreement. April, so long ago. Is this still the case, or has bonds grown even fonder?
April does seem like a very long time ago, actually. It's 3-4 months ago, right? But time just seems to be flying by currently. In essence, that MOU signed was a follow-on from the government's forming the position of our Project 3 opportunity being of strategic importance to the country. And in addition to that, that MOU falls out the back of another government incentive that is also focused on our 11B license, and that's an underground gas storage project where the government is currently defining and adopting laws associated with establishing a robust carbon capture and storage law that will incentivize players like Block to pursue opportunities across mature and somewhat depleted fields. So the MOU in essence just ensures alignment between the both parties, whilst in parallel we aim to work up a future field appraisal and development plan associated with Project 3. So that's an exciting piece of activity that's ongoing there, Sarah, and we hope to advance that activity towards the end of this year, moving into Q1 next.
Many thanks. Paul Haywood, Chief Executive of Block Energy. Thanks for your time.
Thank you, Sarah.